Hey guys, welcome back to the Independent Investor channel. These videos really are where the rubber meets the road in taking any sum of money and allocating them or devoting them to the stock market in a strategic manner. Guys, if this is your first time tuning into the channel, subscribe to the channel. We talk in depthly about techniques that you can use on your own to become a self-directed investor. And this is going to be how to invest $5,000. And this, for most people, can really be one of the most important videos that they can tune into. My next important video is how to invest $1,000, because myself included, a lot of people out there had to start from somewhere, okay? And a lot of it is starting that savings account and starting to build up some investment capital, because there's a lot of people out there that I talk to who are interested in entering in the stock market, and they know to get some level of savings built up so they're prepared to deploy those funds into the stock market is going to be one of those preliminary steps that they take so that they can enter into the stock market. On the other side of the coin, once they get those funds built up, a lot of people just don't know where to start. They have a sum of money and they don't know how to really strategically look at what their options are to deploy in the stock market, all right? Now, a lot of channels come out with how to invest $1,000, how to invest $5,000, and I think a lot of them provide you with 5 stocks to buy. You split it up 20%, and there you go, you're off and running. For those of you who are new to my channel, all right, there is a fundamental difference on the Independent Investor channel. What I try to do is to provide you guys with a multitude of different options that can be deployable to anybody out there, irregardless of their age, right? And those options can be determined based on what type of risk tolerance that you have to the stock market. Furthermore, before we talk about investing any sum of money, okay, we're investing money to make capital appreciation, all right? I tend to be a value investor. So what I'm trying to seek in the stock market are dividend capital appreciation, because over the history of the stock market, 75% of the wealth that's been paid to stockholders have come in the form of dividends, not capital appreciation, all right? So your companies out there like Facebook, Google, your high growth companies, as good a companies as those are, as a beginning investor, you should really be looking to become a value investor, to invest in stocks that have been proven over time to be increasing their dividend. Now, what does that mean? It doesn't do anybody any good to seek out a Coca-Cola or a Procter & Gamble or a Johnson & Johnson or a Wells Fargo, JP Morgan, ExxonMobil, any of these value plays that I talk about all the time on this channel without housing those assets in the proper account. And for you guys that are new to the channel, I may be throwing out terms that are new to you. And I highly encourage you to perk up, do your own research, go back and research some of my catalog of videos, because I talk in depthly about the prospects of self-directed investing. Make no mistake about it. You probably have friends out there who have no idea about this. You probably know amongst your community of folks, friends, family, colleagues at work who have never heard of this concept before. That's why I came out with the Independent Investor channel. I'm currently managing a portfolio just around $300,000. I make less than the median income in the United States, and quite frankly, there is a lot of investment capital out there in the United States that really needs to be participating in some form or fashion in the stock market, all right? Now, when we're looking to deploy $5,000 into the stock market, this is a really interesting level. And if you are not invested and you're going from $0 to $5,000, what this really means for you is you could take half of this and what I consider a balanced portfolio and take $2,500 and put it into either one of 2 investment vehicles, one being an exchange traded fund, all right? My favorite that I recommend, and I've recommended on this show many times in the past, has been the VOO, and I tend to not stray very far from what Vanguard offers on their website, and I've provided links to every single one of these funds. If you research any of the Vanguard funds, they're going to show you that they're in the top 90th percentile for cost to consumer. They're cheaper than 90% of all products that are offered. That's really why the owner of the company is actually not very well liked amongst the industry, because he kind of blew open the doors and said, you know what? We can do this for investors. We can get investment capital in-house and still provide a better than average product to consumers who are looking to participate passively in the stock market. And make no mistake about it, ETFs do trade like stocks, but they are passive in nature, okay? What I mean by that is you could take your $2,500, start it into a balanced portfolio where you take 50% of your money, $2,500, get it into a self-directed account, buy nothing more than VOO, right, and sit on that account for 40 years, all right? That product is built to be left alone. It is built to pay you dividends. I believe the dividend payout is 1.75% in VOO. And the expense ratio on VOO is 0.04%, which is, it's about as close to zero as I can get you. I'm not putting you into a self-directed account to save you on the expenses, only to put you into a managed mutual fund that's going to cost you 1.5 or sometimes upwards of 2 basis points in expense fees. I'm not going to do that. No way. The information that I pass on this channel is meant for you guys to get the maximum benefit out of your dollars and allow those dollars to grow and compound unobstructed going forward. And really, the only thing that you guys have to do is to understand the importance of starting the right account, putting those dollars in motion, funding those accounts going forward, and allowing those accounts to grow over time. All right, so when I talk about the balanced fund, I've offered a series of stock cards. Basically, if you have $1,000 to invest, or if you have $5,000 of capital to invest, you can basically just pull your $5,000 card, all right? Now, within each of the dollar amounts, I've got 5 different options for you to kind of choose from, because there's no two investors that are the same. If you go into a financial planner and you sit down, they're going to try to channel you into their proprietary fund. And I'm trying to blow the doors off of that entire perspective, because if you are empowered as a self-directed investor, you can really understand that the options for you may not be suited for the next person and the next person, or maybe even me. But what it allows you to do is explore those options in a landscape where there's financial products out there where there's 1,000 different ways to succeed in the stock market, not just one. Okay? And I contend to believe, and I still contend to teach on the Independent Investor channel, that going with a managed situation is planned failure going forward anyway. All right? You set these plans to work in a self-directed program, and you can allow these investment assets to grow over time unobstructed. Now, when I talk about the balanced portfolio, $5,000 allows you to put 50%, $2,500 into that passive camp, right? Either an ETF or an index fund, all right? And an index fund is going to be a little bit more like a mutual fund, but it's going to be an extremely low expense, because it's going to track the benchmark without any management going on within that index fund. And the reason why $5,000 is such a key level is that most of the index funds that are worth their salt, according to me, have a minimum to buy of starting at around $2,500. I'm in one right now. I'm in the VFINX. That's the Vanguard's. I don't own it. I own it for my spouse. It was a perfect baseline in her portfolio. But it did carry a minimum to buy, and it does have a minimum funding schedule as well in that index fund. So the 50% can be taken up by a passive approach, and the other 50% can be taken up by stocks. And a lot of people out there are like, wow, I have $5,000. You mean you would recommend that I can go and just buy stock with 50% of that portfolio? I sure do. I don't tend to talk along the lines that you need to spend the first 20 years dabbling your feet in the market. If you want to buy Google and you want to buy Facebook, you can do that, all right? And I've provided resources on my Facebook page that you guys can go in there and look at. If you were an option B basic investor, I have 3 categories. I have the advanced option A investor, I have the B, which is the basic investor, and I have the C investor for the conservative, okay? What that basically means is if you're a conservative investor, I've got you in a risk tolerance of 1 to 3, okay? You're one of those investors that are really, really conservative, really, really safe, don't want to lose money, don't have a lot of experience, could potentially move up to a basic investor, right, in due time, but you're being honest with yourself and you want to start somewhere, all right? The basic investor camp is one investor that has a risk tolerance of 4 to 6, all right? 4 to 6, and that's really where a lot of people are going to fall, okay? Whether or not they're at the low end of that scale or whether or not they're at the higher end of that scale. Most people fall into the basic investor camp, and I've built job aids, sheets of stocks for you guys to go in and look at and say, okay, what investments is Ryan recommending on the 50% side of the portfolio, and what stocks is Ryan investing on the other 50% side? You may disagree with some of them, and that's totally fine, but what it does is it gets you thinking in terms of general portfolio building and not so specific portfolio building. And I think that's where a lot of people go wrong. A lot of people think, I've got $5,000, I have to pick that perfect way of investing, and that perfect way is the only way. And that's not what I want you guys to think. I want you guys to explore all your options within all of the sectors, and with that remaining $2,500, okay, on this side in a balanced portfolio, remember you got the passive over here and you've got the stock over here, you could split that up and start positions, $500 positions in 5 different stocks, and that's going to give you some really good exposure to some of the sectors out there, all right? Now, a technology sector recommended weight is 19%. The recommended weight for telecom is 3%. For example, I'm not going to tell you to invest 20% in Verizon and invest 3% in Apple computers, okay? It's going to be the reverse of that, all right? And all those job aids are located on my Facebook page, so you guys can go in there and very easily look at a sheet and say, wow, Ryan's really done a lot of work to break down what stocks he would recommend under each of the sectors, right? Technology, energy, telecom, discretionary, staples. I've broken it all down for you guys, and you can kind of see I've put pictures of the actual stock names on there, and ones that I feel that if you fall into this basic investor camp, you can actually look at and say, wow, I never really thought of a CVS as an investment potential. I never really thought of a Lowe's as a potential investment, and so on and so on. And you can go on there and you guys can go ahead and seek that out. Now, that's on the balanced portfolio. Remember when I said that there was 4 other options for you, all right? If you're in the camp of a basic investor and you say, Ryan, I'm not interested in going into a passive, okay, I've thought about all this beforehand, guys, so I've broken down the information to say if you want to take $5,000 and you want to lump it all into stock allocation, you can do that, okay? You can absolutely do that, and that's just called a stock portfolio. And the way I would recommend doing it is if you took $5,000, again, break it down into 5 stocks, $1,000 per stock. That way it'll give you some exposure. Again, I want you a little more heavily weighted toward the technology, right? 15% to healthcare, 10% toward your discretionary, 11% toward your staples, right? So we want to try to keep that balance of portfolio to where we're putting a little bit more emphasis on the technology side of it, right? I think that should be the biggest weighting in your portfolio. It's the most exciting sector to be in nowadays, guys. That encompasses everything. Your Alibaba, your Google, Facebook, right? Your Apple computer, Intel, Cisco, etc. All those names, you have to have some exposure to those. And this allows you to do that. But if you're looking to go with a 100% portfolio, you can do that, all right? As a $5,000 basic investor, all right? Now, the flip side is if you say, look, I'm a basic investor, Ryan, but I don't want to do a 100% stock portfolio, then you can do 100% passive investment. And a lot of people have hit me up through the Facebook page and they're talking about some incredible baselines that they've started for themselves. Incredible. Based on the information that I've passed, and I am glad to do it. Guys, I will recommend Johnson & Johnson and Procter & Gamble and Home Depot and assets like VOO all day. Why? Because I know that over time, those are going to pay you back. I know that if the stock market gets cranky and volatility picks up like it has been over the last couple weeks, that I can rest assured still stand on my 2 feet and provide that information to you. Why? Because it's the best information that you can possibly get with regard to putting your assets to work in the best way, but also the safest way. All right? And so the other 2 options that I talk about within the Facebook group on how to maybe potentially look at breaking down $5,000 that you may have is to go ahead and go with a passive blend portfolio where you take 75% of these dollars, just around maybe $3,000, a little bit more, and devote that to your passive investment options. And then you take the remaining 25% and you allocate that to a stock portfolio, right? So you kind of see how these numbers, 75, 25, right? And then we take the mirror inverse of that portfolio where it's a passive blend, right? The majority of the assets are weighted toward the passive side of the house, and we flip that and we provide you an option where it's weighted towards 75% in the stock portfolio, where you can invest 75% of those dollars into the stock portfolio and 25% you can go ahead and start that baseline on the passive side of the house. Guys, if you're interested in any of the options that I've provided to you guys and how I strategically break down how it is we can make the rubber meet the road, this is some of the funnest fundamental stuff we can do. And when I talk about empowering individual investors through tuning into the Independent Investor channel, I'm honestly teaching you guys to really never need this information from me again. I want you guys to take it, run with it, deploy it in your own lives, right? And kind of share in some of what I'm realizing in my financial goals, and that is to achieve financial security down the road, guys. This is how you fundamentally break down information to look at a chunk of dollars and allocate in certain percentages within a self-directed account and how to maximize those potentials going forward. Guys, again, if this is your first time tuning into the Independent Investor channel, subscribe to the channel. If you know anybody out there that's looking for information on entering into the stock market and more so entering into the stock market correctly, certainly tune them onto the channel. I've got a lot of referrals going on right now. Thank you so much for that. I really appreciate it. We're building the channel from the ground up, and it's building based on the strength of the referrals that you guys are providing for me. Leave your comments at the bottom on how we could strategically take $5,000 and deploy it into the stock market in a strategic manner, guys. I offer these to provide you guys a myriad of different options out there, and they are vast, and you can succeed in any one of them if you just deploy some fundamental strategies to your own investment lives, guys. Thank you so much for tuning in, and good luck in your investment future.